Good evening. This is Doc Severson for the Theo Night Report for Thursday, January 18th. Okay, just a quick turn around the markets before I'm going to get to my first topic, which is to show you the only trade that is working for me today, the only setup that is reliably working for me today. So the S&P was down about 4.5 points today, just a little bit of an inside day here up near the highs, just below that important expected move upper limit. So this is the first time in 3 weeks that we've actually seen a little bit of shyness as the prices approach that upper expected move. The Russell has also come down a little bit. Another inside day here, so we're seeing this consolidate as the price hit exhaustion on the daily chart. And the Dow did not have a very good day today because of the fact that the number one component of that, which is Boeing, actually had some hard selling in there today. So 3% down on Boeing, being that the Dow is a price-weighted index. Boeing has the biggest impact on the Dow. And not necessarily GE, because GE is floundering down near somewhere in the teenager prices right now. So an expensive stock like Boeing has a huge impact, not only to the downside, but also recently, of course, to the upside. And as we look at Boeing, actually, this is a good segue into the only trade setup that's working for me. So one of the rules I've always had in the past is don't buy something at the highs. Don't force the price to make new highs on your setup. So if you're going to take this as a long, like this is a good example of this, that don't take this trade setup long because it was going to have to force this thing to print new highs for any long trade to work out. There's lots of other candidates out there where I could pick where it doesn't have to hit a new high just to be able to hit a profit in the trade. So I've always avoided ones like this throughout 2017, and then finally got near the year end and I said, what am I, nuts? Every single one of these has been just blasting into new highs. So all these momentum stocks, they don't care about moving into new highs because they're all being traded by algorithms. They're not being traded by human beings that are saying, hey, wait a minute, it's going to have to make new highs to make a profit on this. They don't care. They're just trading momentum. So one of the changes that I made as I've gone into the new year is to say, well, forget about that. First of all, forget about the energy levels on the monthly chart. Secondly, forget about the energy levels on the weekly chart. We're fully into the finishing euphoric tail of a bull market, and the greatest gains are always going to be made during that final fear of missing out stage. And so you just sort of have to hold your nose and jump into this. Now, I'm playing this a little bit differently because I only use limited risk option spreads with these. So I'm not buying long at these highs, right? We're just setting up a spread and going along with that. So we've defined our risk from day one on these. So a good example of this setup is then only to look at the daily chart and say, all right, I'm going to look for an area where we have high levels of energy in the stock that we're looking for. And this is easy to scan for, and then simply look for the breakout above there. So I did not take this trade on Boeing, but this is a good example of the type of trade that we're going to look for. So as it broke above 300, look at this, it put on 50 points in just a few days. Now, some of the ones that we have taken are like KRE for the regional banks. So it's an ETF for the regional banks. And in this case, actually, we did have some energy. We had nice uptrends, going in place here, at least a decent amount of energy. But again, really all I cared about is what I'm seeing here. And let me zoom in on that and show you what a nice pattern that is. This is exactly what we're looking for. We're looking for something like this that's building up a lot of energy. That spring is being wound up as the price gets into the apex of that triangle. You can see the fractal energy study here, very high, building up a lot of pressure. Now, again, before this, I would not have taken this trade because it's going to have to print new highs to make a profit on it. No longer in 2018, right? So we took the breakout from here and 50% profits in just a couple of days. Walmart is another example of this, where we just sort of have to say, you know, turn a blind eye to the amount of exhaustion and how strong this has been. So forget about the monthly chart, forget about the weekly chart. We are looking at this by proxy saying, okay, the trend is good. Normally, I would never, ever buy into something that's going completely insane, something like that. But these are different times, right? So you have to use different approaches to this. I can't just go back and say, well, I've never done it that way. You have to adapt, adopt, improvise. So here we go with Walmart. So we had a nice little pattern at Walmart. Zooming in on this, you can see this nice little, it's almost an ascending triangle type of pattern. Now this one did a false breakout, fumbled around in here for a few days, and eventually, thanks to a very fortuitous upgrade this morning, I was out of this trade as well too with 55% return. Now here's the point, guys, is that this is not going to last forever. Definitely not going to last forever. None of us thought it was going to last this long, this type of movement that we're seeing in the charts, right? But it will tell us when it stops working. So look at all these clues in the S&P. Every time that it consolidates and builds up a level, boom, it's doing the same thing over and over and over again. It's almost like we have to be hit in the head with a brick to finally get it and listen to what the market is saying. So when markets move like this, I'm not going to put up a filter to say, how dare you move like this? So I challenge, there's all kinds of reasons why this will come to a bad end. We all know those, right? But price is the ultimate arbiter. It's doing what it's doing right now. I'm not going to sit there and argue with it. I'm not going to lay across the freight train tracks and say, I dare you to run me over. I'm just going to take what the market gives me. Now, with that said, what are some things that I can look at to see when this is going to change? Well, one of the ways that I can look for that is to look at ATR. So ATR is average true range. And let's go over to the S&P 500. And what we're seeing here is that ATR has definitely been on a rise. And what that means is that more volatility means more instability coming into. So larger candles, more instability, more volatility is actually coming into the market. And that's a big change from what we saw in the fall, where it was just very quietly inching up. All of a sudden, we're getting panic buying now. And panic buying shows to me, that shows emotion, and that shows that instability is coming in, it's sneaking in. So it's very much a sort of surreptitious indicator that's really running in the background, where you just don't notice it until it's too late. But we're noticing these things. And the other day I talked about the volatility indices kind of sneaking up as well too, as we start to see the price continuing to go higher and higher. We have volatility going higher and higher. Usually the two are running exclusive to each other. So where have we seen something like this before? Well, I think really the best example of this was back in 2014, where we had sort of the same thing happening here. So let's zoom in on that area. We had some very low volatility, and then we start to see it sneaking up, getting louder and louder. And all of a sudden, we actually did get ourselves a full Ebola correction here. It actually was, this is little known, but it was actually 10% to the tick on the S&P futures. So this one was always talked about as not being a full correction, but it actually was. So let's keep our eye on the ATR, because the ATR will show us when things are starting to get more unstable. And when markets get more unstable, this is where it takes just that little one straw that breaks the camel's back to get really things rocking and rolling, in this case to the downside. Wouldn't that be fun to get two-way tape again and a little bit of volatility to sell? That is it for today's report. Thanks for listening, and we'll see you this weekend. Take care.